Hi, Tim Bigham back again this week for Delta Derivatives, option hedges and edges, powered by the best option scanning tools out there at rbtrader.com for traders exclusive, and looking at, once again, at a market that really doesn't want to make up its mind. We're hovering right around that former breakout area, right around that 2120 level on the S&Ps. Keep chopping back and forth. Certainly the price action this week. Tuesday's big sell-off, Wednesday's big rally, showing a little weakness today. So I think a little regurgitation until further notice. We have, the stock market not cheap anymore by any stretch of the imagination. I did a quick comparative comparing the S&P PE ratio to the VIX, and we're trading at the highest level really almost we've ever seen. Last two times signaled market tops here, so caution needs to be warranted with stocks at high valuations and the VIX at low levels. Other than that, as we've been talking about, using those arbitrator scanning tools to find some opportunistic trades. Certainly yesterday, the deal on Avago, AVGO, there was some unusual call activity right before that news hit the tape. So certainly that buyer of those calls was fortunate, to say the least. We'll see what comes out of that, but they did profit handsomely, whoever bought those calls. Also looking at a couple drug stocks here. First of all, Merck, MRK, saw big buying on Tuesday on the May 60 calls that expire tomorrow. So they only had a few days to go. Big buyer, 35,000 contracts traded, only a few hundred open interest before that. Drove the implied volatility from about 15 to well over 24. I jumped in and did a calendar trade. I bought next week's 60 calls at a comparatively inexpensive implied volatility, sold those expensive ones, looking for the stock really to hopefully pin around 60. Last I looked, it was about 59.60, so far so good with the day to go. Paid about 23 cents. Took off a little this morning for 34 cents. We'll keep the other position till expiration if I can and hope for a pin there. Another one, Bristol Myer, seeing big buying on next week's 69 calls. I put on the same kind of trade structure. I bought the following week's 69 calls, sold those expensive next week's 69 calls, really bought about a 28 vol, sold a 35 vol. Again, looking for that stock to move up slightly. The stock was about 68.40, so a slightly bullish position. More importantly, looking for that vol to convert. So again, implied volatility is just another way to say the price of the option. A lot of over-the-counter option guys actually quote options in implied vol, not actual prices. So using the option scanning tools to highlight big option volume, big size trades that temporarily distort the implied volatility surface is really kind of the forefront what we do at Delta Derivatives here to capture that edge, lean along with the paper flow. So until next week, this is Tim Bigham. As always, keep those position sizes in place and those stops going. Take care.